Hello, everyone. Today is the 3rd of March, 2025, and this is the Just Dario Daily. The title of today's daily is The U.S. Crypto Reserve Plan, what it means for investors everywhere. Let me paint you a picture. Imagine the US Treasury announced it was buying up Amazon stock, Swiss francs, and commodities to hold as a strategic reserves. Markets will go haywire. Now, replace those assets with Bitcoin, Ethereum, and a handful of other cryptocurrencies. That's exactly what's happening. President Trump just declared he'll sign an executive order to create a US sovereign cryptocurrency reserve, naming Bitcoin, Ethereum, Solana, Cardano, and Ripple as its pillars. This isn't just a political stunt. It's a seismic shift. The US is no longer dismissing crypto. It is hoarding it. And when the US or other big governments hoard, like China for gold, for example, markets bend. However, while the US leans into crypto as a strategic asset, Europe is sprinting in the opposite direction. The EU markets in crypto assets, MiCA regulations, set to fully roll out in 2025, are a labyrinth of compliance rules designed to protect investors, but risk strangling innovation. Brussels is treating crypto like a dangerous toy, while Washington is treating it like a weapon. Let me walk you through what it means and why Europe's approach could backfire spectacularly. Layer 1 blockchains are the foundation of crypto, the main streets where transactions live. The US government just lit a flare over 5 of them: Bitcoin, Ethereum, Solana, Cardano, and Ripple. Bitcoin, the digital gold, will thrive. Its 21 million supply cap and global brand make it the obvious choice for a reserve asset. Ethereum, meanwhile, is the backbone of decentralized finance, DeFi. If the US wants to modernize finance, Ethereum isn't optional, it is infrastructure. Solana and Cardano, they are efficient, compliant newcomers that governments love. XRP, with its legal clarity and bank-friendly design, rounds out the list. But what about the rest? Chains like Algorand or Stellar, technically brilliant but politically invisible, will struggle. Litecoin, despite its loyalists, feels redundant next to Bitcoin. Here is the kicker. Other countries won't sit still. Just as the US embraces Solana or Cardano, nations in Asia or the Middle East might rally behind chains like Binance Smart Chain. BSC is already a powerhouse in Asia, offering cheap transactions and deep ties to Binance, the world's largest crypto exchange. If the US Reserve sparks a global blockchain arms race, BSC could become Asia's answer to Americans' picks. Meanwhile, Europe is fumbling. MiCA compliance costs are so steep that startups like France Sorare, an NFT platform, are relocating to Flanders jurisdictions. The UE rigid rules prioritize stability over innovation, leaving European Layer 1 projects like Polkadot, headquartered in Switzerland, in a regulatory purgatory. While the US and Asia build, Europe is building paperwork. Layer 2 and 3 networks are like specialized tools built on top of Layer 1s. They're not the main event, but they make the main event better. The winners here will be those tethered to the US-based Layer 1s. Take Arbitrum and Optimism, Ethereum's trusty sidekicks. They'll boom as Ethereum adoption grows. The Lightning Network, Bitcoin payment layer, could finally go mainstream, turning Bitcoin into a currency you use, not just hoard. The losers, projects like Scale or Raiden, which don't have a VIP pass to the Layer 1 party. Even Layer 3 projects, those hyper niche chains for gaming or NFTs, will fade unless they're piggybacking on Ethereum or Solana. Without a connection to the chosen chains, they are digital ghost towns. Europe's regulatory overreach amplifies this divide. Take Starkware, an Israeli ZU Layer 2 project. Despite its cutting-edge zero-knowledge proof, Starkware faces MiCA compliance gauntlet, which could slow its adoption across Eurozone. Compare that to Polygon, an Ethereum layer 2 with strong US ties, which is supposed to benefit from America's pro-crypto stance. Europe isn't just losing the layer 1 race, it's sabotaging its layer 2 future. Let's be clear. The US isn't stockpiling crypto just to flex. They are betting on blockchain's utility. That's why projects solving real problems will dominate. Chainlink, which feeds real-world data like weather or stock prices to blockchains, could become as critical as the internet itself. Filecoin, offering decentralized storage, is an edge against data monopolies. DeFi lending platform, potentially with official bank endorsement, might redefine transactions and banking services for millions. As I wrote in Value Investing in Crypto, the best crypto project don't need hype, they need users. Utility is the ultimate moat, but Europe's regulatory obsession could stifle even these champions. Consider MakerDAO, a decentralized stablecoin project founded by Dane. Under MiCA, its governance token, MKR, faces classification as a security, subjecting it to onerous reporting rules. Meanwhile, US-based projects like Circle, issuer of USDC, are thriving under clearer guidelines. Europe is regulating utility into exile. Let's now talk about the elephant in the room, meme coins. The US government move is a death knell for 99% of them. Tokens like Farcoin or DogFire, built on jokes and zero utility, will evaporate under regulatory heat. But there is a twist. Established meme coins like Dogecoin or Shiba Inu might linger. Why? They have achieved something rare, cultural relevance. Dogecoin is accepted by Tesla. Shiba Inu has a massive vocal community. They are the quote-unquote blue chip memes. But don't confuse survival with success. As I argued in the article, Farcoin is the latest proof of how diametrically wrong central banks' policies are. Meme coins are the symptom of a speculative fever. When the fever breaks, only the strongest viruses remain. Doge and Shiba might hang on, but they'll never be serious investments. In Europe, even these survivors face existential threat. MiCA's strict marketing rules could ban meme coin promotions outright. Germany's BaFin, for example, recently fined a crypto exchange for listing unregistered speculative tokens, a category that could include Dogecoin. Europe isn't just killing the clowns, it's boarding up the circus. If you are wondering how to navigate this new world, I'll leave you with 3 principles from my earlier work. Bet on infrastructure, no jokes. MicroStrategy relentless Bitcoin buys that I described in the article, What If MicroStrategy Becomes Too Big to Fail? Show where a lot of institutional money is going. Principle number 2, follow the geopolitical tides. The US isn't the only player. As I noted in BlackRock's Bitcoin master plan, when giants move, the herd shakes. Watch how Asia responds with chains like BSC, while Europe ties itself in a red tape. Principle number 3, ignore the noise. Focus on value. As extensively discussed in the article, a crypto update to Ben Graham's Intelligent Investor, and value investing on crypto blockchain projects already in 2023. President Trump's crypto reserve plan isn't just about politics. It's a declaration that blockchain is here to stay. The winners will be chains with sovereign backing, projects that solve problems, and investors who see through the meme coin fog. Europe, that as usual is playing checkers and not chess, is writing its own obituary. By treating crypto as a threat rather than an opportunity, the EU is ceding the future to the US and Asia. While Frankfurt debates transaction reporting rules, Miami is building a blockchain hub. While Paris fines meme traders, Singapore integrates crypto into its financial system. As I wrote in Why a Bitcoin ETF Will Remove the Barrier Between Central Banks' Money Printing and Crypto, institutional adoption changed everything. And now that we are shifting to a major government adoption, the changes in the global economic ecosystem just geared up. The rules have changed. Adapt or get left behind.